Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or yes there. Just let me know that it is working. Hope everybody's had a fantastic evening so far. It was awesome to see several of you in the COT report or the sentiment trading webinar just a few moments ago. So thank you for coming to that. That was awesome. Awesome. Well, let's jump into this. Before we get into our COT report webinar, as always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, guys. So let's talk about the COT report. Well, first of all, before we jump into the journal and just a little bit more about the COT report and what we do with it, I do want to give a basic rundown of what the COT report is for those that are new to the program, just to make sure that you guys have your fair shot at what the COT report is first, and then we'll kind of jump into some of the other things that we're doing with it right now that are really exciting. So let's actually go ahead and show you what the COT report is. If you go to cftc.gov, this is a United States Financial Regulatory Authority. What they do is they monitor and make sure that the futures and commodities markets run smoothly and without fraud, or at least, they mitigate fraud. We'll say that at least, right? And one of the responsibilities that our government has in the United States is to release the COT report. And if you come here to market data and economic analysis, and you click on commitment of traders, which is the COT report, it pulls up this page. And this page has all sorts of information about the different types of COT reports. So there's different, and again, they're called commitment of traders. And the reason why it's called commitment of traders is because it's the current commitments or trades that traders who are registered with CFTC have open. So if the CFTC is monitoring like all these different banks, and these banks are actually required to inform the government every week their current holdings in the market. So if they have long positions on the euro or long positions on the British pound or the yen, they have to report those holdings to the CFTC, and the CFTC then releases it to the public. They don't necessarily release individual corporations or individuals or organizations that have positions, but they do, however, let us know collectively how big those positions are. Okay. So these positions can come from, like, they've got agriculture COT reports, they've got petroleum COT reports, which we actually started using that one just this week, now that we've added oil to the mix in our scanner. They look at natural gas, electricity. Here's where you get your metals for gold and silver. There's COT reports in the financial futures market, which we look at for our leverage funds. And then you have these legacy COT reports down here, which is where we find non-commercial and commercial data, which is probably the most common COT report that is used out in the trading world. Okay. So let's actually look at a COT report for those of you that are new. So this one right here. There's a lot, but if you look at the short format of the Chicago Mercantile Exchange, this is the most common COT report that anybody anywhere pulls up right here.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders, and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code friend of Steve, that's friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
So it's kind of hidden. I guess you have to search for it a little bit, but this is what it looks like. Okay. So, if you look, I'm not the only one who teaches about the COT report. There's a lot of different places online that teach different COT report ways of trading the COT report. I've even subscribed to several, and some of them are good. Some of them are not as good. But what I have found is, well, I've found a lot of things, and what I've concluded to is trading the leverage funds caught data, and I also look at the shift in commercial data, right? And this is actually relatively new, and we'll talk about this. But one thing you should look at when you're looking at COT report data is the non-commercial and the commercial side of the market. Let's actually look at a currency. Let's actually pull up a like the Aussie. This is another thing you'll notice when you're looking at COT reports. So, they're kind of boring and they look really old, but I kind of like that they're so simple like this. Well, I guess they're not that simple. For me, they're simple. I guess once you know what you're doing with it, it's simple. Um, but basically, you come in here and you can search by currencies. Now, you can't search by currency pairs because, again, this is the Commodities Futures Trading Commission, not the Commodities Futures Forex Commission, because Forex is actually not like here in the United States, it's not like it's a decentralized market, whereas the futures market is is US only. So it's a centralized market. Same thing with the United States stock market. That's centralized, right? You can't just, like if you live in Africa or you live in Malaysia or something like that, or India, you can't just go out and buy US equities. You have to have a brokerage account that's connected to the exchange, okay, so that you can actually take those positions. Now, on Forex is traded globally, um, and the market's decentralized. So you can have like different brokers all around the world that deal Forex. That's why I feel like the different brokers like nobody outside of Forex talks about, oh, should I go with this broker? I should go with this broker. No one really says that in stocks as much. It's always about Forex. And I'm like, why do people ask all the time about what broker they should go with in Forex? Well, part of it's because the broker is what creates the market. Now, the broker tries to keep up with, they're pinging over here. Okay, this market over here, Osprey's doing this, Owanda's doing this, Forex.com's doing this, IC Markets is over here. And so they're constantly pinging each other to get data like, okay, they're selling the euro for this every second. They're trying to get that information because it's a decentralized market. So you're trading Forex based off of the opinions of that broker versus this broker and the collective trades that are taking at those different brokers, which is why I think a lot of people ask, like, okay, which broker seems to be more fair? Because the broker has a lot of saying and how like your trades get executed and all that kind of stuff because it's kind of their market, even though it's a global market. That's why I feel like the conversation comes up so much in Forex. Um, Whereas like in stocks, you have an exchange that sets the price, and it's the That's an interesting thing about futures and commodities trading here in the United States is we set our own prices through our own exchanges. So anyway, I just want to explain the difference between Forex and these different markets, but they don't look at Forex, but what they do look at is the futures contracts of individual currencies. So you have just simply the Aussie currency right here. Or if you're looking at like the Canadian dollar, you're not looking at USD CAD or Aussie CAD. It is simply just the CAD that you're looking at. Okay, which is kind of nice because this gives you some intel on what's happening to individual currencies, right? So, um, so like for example, with the Australian dollar here, this is what's currently happening between non-commercial and commercial data. So you got the long positions here, shorts here for non-commercial, you got the longs for commercial, and you got the shorts for commercials right here. So you've got, this is the information that we're looking at right now. Now, one thing I want you guys to note as you're looking at this COT report is which market is bigger, okay? Which one has more outstanding positions? Commercials, so these two numbers versus these two numbers. Collectively, which two numbers are bigger? And hopefully you'll note that commercials is bigger, right? There's 126,000 contracts long on the commercial and 54,000 short on commercial. On the contrary, you got, or on the other side, you've got non-commercial with 34,000 long and 99, almost 97,000 short. So there's definitely more contracts going with commercial. Now, one of the things you'll see when you go on the internet is you'll see a lot of people trading non-commercial data. Now, these guys, why do a lot of people like to follow non-commercials? So non-commercials, these are the speculators. These are the large speculators that are there in the markets who are just simply trying to be in the right direction. So a lot of the times, um, if you follow non-commercial data, you'll be in the right direction. Not when I say follow it, if you just follow the straight, like, okay, they're mostly short, okay, we'll go short. Or if you follow they're mostly long here, okay, then they'll go up. Right here, they're mostly short, so long is the minority. And so, yeah, over a 6-month period, 9-month period, 12-month period, this is probably the direction the Aussie's been going. It's probably been going down because that's the prevailing direction. Um, Now, another thing to know, so those are the big guys. So a lot of people like to follow non-commercial because these guys are usually right as far as the long term goes, but they happen to actually struggle in the short term, like the most immediate week or the most immediate couple of weeks in the market. So there's something important to know about commercials that is really important that I feel like a lot of people don't talk about. And this is the part I don't like to post these videos on like the COT report videos on YouTube anymore because this is extremely proprietary and it's something that we really have an edge on right now. And it's cutting edge. It's making a lot of noise in the market. So I only teach this in our calendars. I don't post these videos on YouTube anymore. A lot of people have asked me to, and I've been wanting to because I'm like, oh, I get so many views on those videos, but I can't because this is extremely proprietary and we're at the cutting edge of this. So one of the things that's important to know, and this is the sauce right here, guys. So the difference is that commercial is bigger and no one talks about this. So commercial is the bigger market. You go look at every single one. Aussie's bigger. Like let's go look at like, I don't know, like the cat or the euro. Okay, which has more? Oh, let's pull it. Not this one. This is it right here. Which one has more positions? Like there are guys. Look at that. There's a 500,000 short positions right now on the euro. And as far as commercial goes, there's 390,000 longs versus the non-commercial side, which is what everybody does out there with their COT reports. It's 123,000 shorts and 212,000 long. So again, my question is, which is the bigger market? Commercial is. So, and no one talks about this. So when commercial makes a shift week to week, it causes such an earthquake that the most immediate incoming week, typically the markets will go in that direction. That's the sauce right there. So when you see a shift in commercial data, and if it's a significant one, it's usually going to cause the market to feel those repercussions the following week, because commercial is in fact the biggest market out there. There is no bigger market, at least here in the United States. And there's commercials, we don't get the data on them, but there's commercial equivalents, all across the world. But this is the United States we're talking about, because this is only collecting data on those that trade futures here in the United States. That's it. So, like I was saying, when these guys make a big move, it really matters. Let's go look at the one. Let's go back to the Aussie. This is one that had a big shift this week. So you look at this. Here's the shift right here. So you can see in commercial data, there was a big decrease in long positions on the Aussie and a decent increase in short positions on the Aussie. And when you get a proportional percentage of what that looks like across, the outstanding long and short positions, turns out that that number is, I believe, let's actually look at the journal. Let's go look at this. That number is, yeah, 7%. So there's a minus 7% shift this way. See, is this the right? No, this is the wrong one. I'm looking at the wrong one. Sorry, guys. Let's go back to the top here. What am I looking at? Oh, I am really far. I was doing some stuff earlier. There we go. Okay. Here we go. Yeah, so it's still about the same though. So right now this week the Aussie has a -7, almost 7% shift in caught data. And then you look at like oh, is this the right one? No, I'm not looking at the right place still. No, there it is. There we go. Okay, this is the right one. Sorry. Here it is. So the Aussie had a -7.29% shift, and then the CAD had a 7% shift. That's why the Aussie CAD was one of our strong sells this week. I know initially with the CPI, it didn't go in the right direction. It does appear that we're starting to get, last I checked, I think a lot of these were starting to come in our favor. Yeah, like here's this Aussie CAD is starting to break structures to the downside now, and I've got several sell positions up here. Aussie franc starting to really come down now, really starting to cook actually here on the Aussie franc. And that actually even broke a trend line structure right there on the Aussie franc. So yeah, I definitely think there could be some follow through there. Also, Aussie yen has been getting crushed right now. We'll see how much that follows through. Already just in the last 4 hours, that's pulled back 0.7%. So we'll see how much that follows through. We'll see. And again, I don't know if it will. I'm just saying that that's what we've got so far, so good. But anyway, this is all based off of um, the shift of commercial data, right? So, and when you look at the COT report, you've got, it's just such a big market, right? It's just such a big market overall. And when these guys move, it creates a repercussion in the market the following week. Now, do we want to follow these guys like in terms of like right now, most of them are long on the Aussie. I wouldn't say that's probably the right direction to go, because like from a longer term perspective, like from a perspective of what's going to happen, in the next, we'll say like 6 months, 9 months, or a year, I don't think these guys are the right guys to follow. Because one thing you should know, and I kind of skipped ahead because I was really excited, but one thing you should know about commercial are participants in the futures market who run multinational corporations for the purpose of managing their books and hedging different investments. So an example of this would be like a McDonald's who has a Forex team. So what does McDonald's Forex team do? Well, what they do is they have bank accounts in literally every country. Most countries will say, right? And they need to transact business in different currencies all around the world. And they have big holdings and they hold assets in different places, and they have to offset losses and they have to offset what they do. And so these guys really are not in it to make money with the currency. They're in it to just be the holders of currency. They're the ones with the deposits, and they have a lot of currency. And when they make shifts, it makes a big move in the market immediately, but it's usually not the overall direction. And they're the ones who provide the liquidity for these guys. And again, that's the thing that no one talks about, is that you and I don't make enough money. We don't have enough money. We couldn't round up every retail trader in the world to be able to move these types of positions on a global level. So who's the market for who? These guys are the market for these guys. Okay. So that's what's actually going on. And so when these guys release positions, it creates an immediate move in the market that can last all week, sometimes multiple weeks. Um, and you want to look for signals in the direction of their shift each week. And this has been really uncanny. Like the results of this have been really uncanny and very accurate. So I actually went on a hunt recently. I think a lot of you have seen this. I put together, oh, I messed some stuff up, dang it. Let's see, where did this go? Um, wonder if I can just put that back. Maybe that put it back. Okay. So I took a picture of every single trade that, or at least the top two shift trades every week for the last like 9 or 10 months or something like that. So this is exactly what we're talking about. So we're getting commercial data, looking at the shift in commercial data, and we are just taking the top two shifts. And if you start the week just taking the top two, these are the results. So you guys remember last week was a really good week. The two shifts were buy pound Aussie at the beginning of the week. That was the number one trade. By the end of the week, it was up 217 pips. Did it have some jig-jag or some zigzag moves along the way? Absolutely. It wasn't a straight line. Nothing is a straight line in Forex. I wish it was. I wish things could be non-roller coaster like, but this is a this I wish things were this way, but it's not that easy. So by the end of the week, just ignore all the noise and you wind up over here. Some of you might look at this and say, and we did this last week with a few trades. We came in midweek and actually came in here and took a couple of midweek trades with this one, or it was the Euro Aussie, I can't remember. But if you just start the week and hold it by the end of the week, you're there. Here's the Aussie CAD. This was actually the best trade this week, which we're in right now. We're still working on that one, but last week, this was actually the best sell as well. Start of the week was right here in the yellow. By the end of the week, you're up 116 pips to there, which is really exciting. That's super awesome. The week before, you've got the NZD franc. That's a buy. That was the best trade of the week. This is the week after October 24th. So like Halloween, this would have been the best trade to have taken. And if you had started at the beginning of the week there, by the end of the week, you're there. That's the power of taking the biggest market in the entire market, the biggest participant commercial shift, just the commercial market, and looking at the shift in week to week, and you're developing these types of signals, right? So there's the best trade, 131 there. Second best trade was this one. So 240 pip win on the NZD yen. By the end of the week, you're up 240 pips. Some of them, this is like as good as it gets, honestly, where it's just a straight line to your profit. Literally every morning you wake up on a week like that, you're just more and more profitable. Um, that hasn't been the case this week. It wasn't last week was a hint of it, but there's a lot of weeks in here where you get it like this. It's not every week, but this is kind of what you want to see. Is just practically every day you wake up and you're just more and more profitable. This is a zigzag week. This is a short, you short here. By the end of the week, you're here. This is a loser. Okay, so this one actually started the week here, ended there, did go in your favor a little bit, but ultimately wound up losing money. So that can happen too. Here's the NZD CAD short. This is from the week of October 10th. Best trade of the week, sell right there, and the end of the week is right there. Then you got this one plus 141 pips starting the week there to there. Here's the NZD franc, start of the week here to there, and then pound Aus. Yeah, we'll stop here, but here's the pound New Zealand, start of the week here to there. So this is really just amazing, just taking the top two shift trades. And I back tested this like 9 or 10 months or 11 months, I can't remember. And if you just take the top two trades, you would have made 3,897 pips. There would have been 13 losers. So again, nothing's perfect. I do got to make that clear. You will have some losers and 46 winners. Win rate was 77. I got to tell you guys, a weekly trade that has a win rate of 77% is just, it's unreal. Like that is really, really, really good, guys, to be able to have a win rate like that. That just doesn't happen all too often with a lot of strategies. That's a clear edge. That I think anybody would say, oh, if you're making 55% of the time, 6% of the time, that's good. That's 77. That is super good. On a report card, that's like a C or a C plus, um, right? But the standard is what? To get like a B or an A. So you want things to be at 85%. In trading, we're not looking to get 85% or 90% because if you were winning 90% of the time, usually that means you're doing something sneaky, like some kind of martingale, some kind of like grid system to get wins that are in the 90 percentile. And usually those come with extreme risks. This is just flat trade, just flat, straight up take the trade, hold it to the end of the week, 77% win rate. That, my friends, is really, really good. You just don't get that. Just taking straight up bet, just straight up trade type of thing. You just don't get that. So I know this week's been a little rough. Especially if you're new to the program, a lot of you guys are pretty new. And so this is, for some of you, this is probably the worst week you've had with the program, or this is your first week. I applaud you for sticking with it, because, a lot of these trades did not go in our favor right away. Like you look at, the Aussie CAD, this was a sell signal, and this news event actually took it the wrong way. Now we're starting to get some breath again, and life here, and things are starting to come back again. But you don't want to see that, right? No, I totally agree. No, I totally agree. But I just wanted to show you when you look at these images here, most of the time it's not like that. A lot of the times these trades mostly just go in your favor throughout the entire week, and it's most of the time it's going to be that way. Um, or just generally going to be that way. But this can happen. And I do suspect, and I think it's possible we still pull out a win here on the Aussie CAD. Like we have till, it's just Wednesday night. We could see this get down here by tomorrow morning. We could see this get down to here by Friday. It's totally possible. I'm not saying it will. It's just definitely, it's in the deck. It's definitely in the deck there. Definitely possible. Can you guys get back into these trades? Absolutely. I definitely think you can. Just make sure that you use a lot size calculator. Don't risk more than an average daily range. Um, I think that's just really the big takeaway when you're taking these types of trades is making sure that you still manage your risk. Don't try to like recover any losses. Don't. It's called revenge trading. Just trade like normal. Take your average daily range, put in your lot size calculator, make sure it's an appropriate amount. That's all I'm asking you guys to do. Take it slow, because slow and steady wins. Okay. What I hate to see is people come in, um, and bet 3 or 4% on a single trade and hope that it will just win. That's not anybody. You're going to lose with anybody's strategy, whether that's your own or somebody else's. You're going to lose if that happens, right? So definitely make sure that no matter whose strategy you're trading, whether that's your own or somebody else's, that you're constantly being mindful of your risk management, and you're not being too greedy on trades. All right, so pretty cool stuff, guys. Any questions about the COT report? So it's kind of fun to see our trades come in our favor now. A lot of this stuff is really starting to move. Like Aussie dollar is now down, let's see, 0.61%. That's great. That's exactly what you want to see. Um, yeah, Euro Aussie's up again, which is great. That was actually a 10 out of 10 on the breakout indicator earlier today. I don't know if you guys saw it when you filter this by breakout. Oh, it still is. Yeah, it was a 10 out of 10, and it still is. It was a 10 out of 10 on the Euro Aussie when it was down here. And I remember looking at this thinking, I wonder if we're going to get a breakout. Sure enough. So it's kind of cool. Like that breakout, we don't talk enough about that, but it is a pretty cool little indicator, especially if you've got a good signal that lines up, and then you've got, a lot of stars, 9 out of 10, 10 out of 10 stars that line up. Pretty good chance you'll get a nice breakout coming soon. It's actually an underrated indicator. We don't talk about it enough, I feel like, but it is great. But yeah, a lot of these are moving in the right direction, which is really Awesome to see. So that's what we're doing, guys, is we look at COT data. What I do is I plug this in to the journal. I've actually got quite a few journals in here that I use for different things. Um, this is the one where we just kind of bring in the raw data right here. We just kind of bring in the data from the COT report. You'll notice here you've got non-commercial side, commercial side, non-reportables, dealers, asset managers, and leverage funds. So you guys know every week we take the top 6 leverage funds trades. This is our long-standing strategy. This is our old faithful strategy. So what we do with those is we look at it's this first tab over here. We're just looking at the top holdings of uh, of leverage funds. So we just come in here and grab the top, the most bought up and then the most sold currencies in leverage funds, and that's what helps generate the top 6 trades a week there. And then the shift trades come from just whatever we can produce from the shift calculation that we run, and then that's how you're getting your top 6 shift trades right there each week.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code Friend of Steve, that's Friend of Steve, no spaces, at checkout and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Any questions? I feel like I've covered most of it. I feel like there's not, the only thing I want to make sure, if you're new to the program, I want to make sure you know how to do this. So here's our Telegram channel. Which, by the way, maybe I'll mention this now. We have built an app for Trading with Steve. It's in review right now with the iOS store and the Google store. So the app is going to be pretty cool. We're going to be posting our signals on the app. So you'll be able to download an app if you have an iPhone. If you're having an Android, you'll be able to download the Trading with Steve app. And in there, you're going to have a place for you guys to just post like it's a Discord. It'll just be like your single feed where you can go in there and just be like, here's my trades that I took today, or you can ask questions directly in the app and interact with other users in the program, including myself. And then there will be just your channel where it's just the signals itself. That is in review with iOS and Google Store. As soon as that's done, we'll launch it. And that's probably going to be the future home of all the signals. So I'll just prep you guys now that that's coming. I don't have it. It's not ready to be downloaded on the store. You can't even search for it yet because it's just in review stage with, we've submitted it to the iOS store and Google Play Store. But once it's approved, we'll go ahead and get that going. But so in the future, you'll just go into the app, the Trading with Steve app, you'll just go in there and you'll get the top 12 trades just directly from there. But for now, you guys are just going to come in here to the Telegram right here where we post the trades. So these are the trades from this week. It looks like this. So every weekend, you're going to get the top 12 trades. Six of them will be from the leverage fund side of the market, and the other six will come from the commercial shift. So there's the two different datas. The leverage funds is our old faithful strategy. We continue to trade it. And then you have the commercial shift strategy, which is a little bit newer, but that's the one with all that data I showed you that where I showed you the results. Very, very good results when you trade commercial shift. This week's been rough though. Just at least the start of the week was rough. It's getting better now, but the initial I lost 5 out of 6 of my trades when I started the week. Unfortunately, it just happens sometimes. But that's again, you got to use that lot size calculator and that stop loss to manage that. So what you'll get here is you'll get your top 6 trades. It'll give you a suggested stop loss for both leverage funds and the commercial shifts. Okay. These stop losses are tailored to the average daily range of each currency pair. That's why you see them and you're like, why is it 62 pips or 94 pips? It's because it's a tailored stop loss to the average daily range. And so when you go in there, um, so when you go in there, uh, you'll take these trades in your account, but before you actually take them in your account, you got to go through the process of using a lot size calculator. So what that looks like is you'll go to a lot size calculator like this one with my FX book, lot size calculator right here. Yeah, I definitely feel so, Bill. I think so too, Bill. Really threw us. Monday was not good, and it's kind of a weird weekend. I love our veterans, but I'm not blaming it on the veterans, by the way. It just so happened to throw us off. It definitely did. Um, I mean, it's nice to be able to like obviously these trades are starting to work out now, but let's be honest, like most of us are going to still wind up losing this week. Like I have prop firm accounts. I haven't even re-entered some of my trades on the because I have a couple of prop firm accounts where I am like super strict. Like I'm with you guys. Like I don't um thank you for your service, Roger, by the way. It's your fault. A couple of my prop firm accounts, I don't even re-enter. Like I'm a hard nose on this. Like, and so like I have a couple of accounts that will in fact lose on the week because their stop losses have already hit, and those accounts I'm strict. I don't re-enter on those ones. I just I straight up hard nose the loss and wait till the next week. So um So yeah, that's where I'm at on those ones. Now I do have a couple of accounts where I take the liberty and try to go back and do a couple of these trades, but I'll be honest, it's like I have just a few accounts where I do that, where I'm a little bit more risky, and usually it's my own money, not prop firm money. And yeah, so I'll go in and do that, but I'm probably gonna wrap up the week still losing just because most of my accounts are set up in such a way to just take those 12 trades a week. So if that's all you're doing, like you're doing great. I know you're going to lose on this week. I'm going to lose this week on those. And it stinks because a lot of these trades are coming in our direction, but you're doing great. You really are. And then just plan on next week to get those again. I mean, at the same time, like I'm not feeling as bad because last week was pretty dang good. And the week before was good. The week before that was pretty good. But it's just the nature of what, sometimes that happens. U.S. Army. Yes. Thank you, Bill, for your service. That's awesome. Yeah. I love Veterans Day too, by the way. I love our both my grandpa served in World War II. I have one grandpa in the he's with Air Force serving in the East, and then I had a grandpa that served Navy in the Pacific. So no, that's often awesome. There's a reason why they're the greatest generation. They're really special. I'll never be like them. They're just like just another level of respect. It's just awesome to have those kinds of people. They're both passed on, but it's just so cool to have incredible people like that. Um, that's awesome. So, all right, guys. So let's I think we're good to wrap up. So, um, like I said, so if you're ready, you're locked and loaded. If all you do is take the week to week trades, you're ready to go for next week. We do have several trades still open. We'll close those Friday. Um, and then yeah, if you want to take some of these other trades that are wow, some of these are really rolling now. Geesh. I love that. I will just love that. It's again, it stinks that it went against us initially, but I just knew this move was coming. I knew it was coming. And we're just it's happening as we're talking. Um, that's so cool. I'm just every single one of them is pretty much going in our way now. Look at these guys. That this one looks good. I like this one, this Aussie Frank. It's breaking this trend line right here. You can see this little trend going on, and it just busted through that right there. So the floor has broken. Now it's like, oh, I wonder where you could go. Maybe, who knows? This could go quite a ways by the end of the week. We'll see. Who knows? We'll watch it. I do have some positions on, like I said, in a couple of accounts. I'm not going too hard. I'm just putting some trades in. All right, guys. Well, have a fantastic rest of your evening, and we'll see you guys in the next webinar. Thanks for coming.